this pair is very interesting. And watching on a monthly chart, the pair kind of behaves on a way it wants to drop back to 98 or even lower to the zone of 92, 93 or so before making one more push towards the future. But all that should happen now. Now we know that March historically is a very bearish month, or at least begin a very bearish period for the dollar yen. March lately was not that bearish, and that means that April and May could be the bearish months to come. We are now at the beginning of April. After non-farm payrolls drop, maybe that's the call that this is about to begin. And if watching on the chart, I think the main call would be if this trend line will be broken. But this pattern, from my point of view, should be duplicated to the downside. Watching on a weekly chart, we are at a very heavy long-term bearish divergence. I do believe and think that this weekly trend line starting from here, you see that? Right from these 2 points, should be retested. That means below 100. So, to make long story short, as long as we will stay now below the 104.10.20 zone, the top that was created on the last week, I think that we should be looking to sell rallies. Every rally to come followed by bearish divergence should be an opportunity to go and to sell the pair. Now this would be the area to pay attention how it behaves there. It might go and meet the pair right there on a trend line. See? I'm talking from 103 down to 102.75. This is a bank zone. Okay? A lot of action is going to be there, breaking below this area, and the doors will be opened most likely for continuation. This move took around a month to complete itself. I believe that Friday, as long as this high will be whole and will not have a close above, I believe this is call for April to complete this bearish cycle to the downside. That's how I think about this pair. Sell rallies as long as 104.20